Welcome back to Investing Talk podcast.
Good to be back.
Today we're taking a close look at Elanco Animal Health.
ELAN. Right. An interesting one in the animal health space.
Definitely. Our sources this week give us a pretty wide view. Recent news, market stuff, financials, what might be next.
So, the usual comprehensive picture.
Our mission, as always, is to unpack all that and figure out what really matters for Elanco right now and going forward.
Okay. Where should we start?
Well, one of the first things that jumped out was some news about their board of directors. Seems like there are changes happening.
Yes, that's right. They're planning to trim the board down to 11 members.
By next year's meeting.
By the 2025 annual meeting, yeah.
Mm-hmm.
It involves William F. Doyle stepping down, and 3 other directors aren't standing for re-election.
What does that usually signal, or what could it signal?
Well, moves like this, they can often mean a company's trying to streamline its governance, make things a bit tighter.
Or maybe point towards a change in strategy.
That's possible, too. A shift in strategic focus. It's certainly something, for you listening to keep an eye on. See how it plays out in their decisions.
Okay. And then switching gears quite a bit, but also really important, their work on canine parvovirus.
Ah, yes, the commitment there.
They've got this big goal, saving 1 million puppies from parvo by 2030.
That's a laudable goal.
Mm-hmm.
And they're backing it up, it seems.
With their canine parvovirus monoclonal antibody, the CPMA.
And also that new tool, ParvoTrack.
Right. Tell us about that.
Well, ParvoTrack, it's essentially a real-time system for tracking parvo outbreaks.
So like vets can see where it's flaring up.
Exactly. It's a pretty innovative use of tech for a major pet health problem. Could be really valuable.
Yeah, I can see that. It gives them a bit of an edge, maybe.
Potentially, yes.
Yeah.
A technological advantage, addressing a significant concern for pet owners and vets.
Sounds proactive. And it seems like they're looking further ahead, too, with some research partnerships.
Mm-hmm. They've entered into an agreement. I think it's exploring therapies for chronic kidney disease.
Yeah, CKD, and even potentially extending pet lifespans using gene therapy and AI.
Now, that really signals a long-term vision, doesn't it?
It definitely feels like they're leaning into cutting-edge science.
Tapping into gene therapy, AI, it shows they're thinking ahead about complex animal health issues. And CKD is a big one for pets.
A breakthrough there would be huge.
Absolutely.
Okay, let's pivot to the financials. How did they wrap up last year?
They finished 2024 pretty strong, actually. Marked their 6th quarter in a row of organic constant currency revenue growth.
6 quarters. That's pretty consistent.
That's a good sign for the core business health.
Yeah.
And keep in mind, their next results, Q1 for 2025, are coming up soon.
When's that?
May 7th. So that'll be a key data point. See if that momentum continues.
And looking ahead for this year, 2025, they've actually increased their target for revenue from new products, right?
They have. They're projecting somewhere between $640 and $720 million just from innovation revenue.
That's quite specific. And overall growth.
They're forecasting mid-single-digit organic constant currency revenue growth.
Okay. And earnings. What's the guidance there?
Adjusted EPS for 2025 is guided between $0.80 and $0.86.
So management sounds pretty positive in their outlook.
They do, but it's worth just noting that their Q4 2024 EPS, the last reported quarter, came in at $0.14, which was actually a little bit under what analysts expected.
Ah, okay. So encouraging outlook, but maybe a slight miss last quarter to keep in mind.
Something to watch, yes.
One number that really caught my eye, though, was their cash flow.
Ah, the operating cash flow, yes.
Over $500 million generated in 2024, and that was double the year before.
That's right, doubled year over year. That's a very positive indicator.
Why is that so significant?
Well, strong operating cash flow gives a company a lot of flexibility for reinvesting in the business, R&D, like we talked about.
Paying down debt, maybe.
More managing debt, yes. Doubling it like that suggests, real improvements in how they're running things or just better profitability flowing through. Got it. So with all this going on, the board stuff, Parvo, financials, what's the general mood around Elanco? What are analysts saying? The feeling seems to be, as I mentioned earlier, sort of cautiously optimistic.
Cautious why? Because of that EPS miss.
Partly that, but mostly I think everyone's waiting for those Q1 results on May 7th to confirm the positive trends.
Makes sense. And what drives the optimism?
Analysts generally seem to like the focus on innovation, the partnerships, the things we've been discussing.
And online chatter, social media.
A lot of the talk there focuses on the parvovirus efforts, the pet health innovations. those tend to get positive attention, understandably.
Okay, let's zoom out a bit. The animal health industry overall, it's growing, right?
It is. Demand for advanced treatments, better care for pets especially, but also livestock. It's a growing market.
And where does Elanco fit in?
They're one of the big ones. Top 4 globally in animal drugs.
Who are the main competitors we should think about?
You've got Zoetis, which is huge, Merck Animal Health, Boehringer Ingelheim Vetmedica. It's a competitive field.
So having things like that ParvoTrack tool, that could be important for standing out.
It certainly could. That kind of tech differentiation, focusing on real-time data and prevention, might give them a unique angle.
Of course, no investment is without risk. What are the potential bumps in the road for Elanco?
Well, the sources we looked at didn't highlight any specific major new regulatory hurdles or big macro risks right now, but those are always factors in this industry.
Gendered farmer risks.
Right. The board turnover we talked about earlier, that could introduce some transitional uncertainty, perhaps?
And a competition isn't going away.
Definitely not. So the ongoing challenge, which is also their opportunity, is to keep growing market share and boosting profitability in that tough environment.
So just to recap their core business, big global player, both farm animals and pets, heavy focus on innovation, sustainability too. They mention healthy purpose pillars.
That sums it up well. Diverse portfolio, strong brands, and that strategic push towards breakthrough therapies.
Okay, digging a bit deeper into the numbers. We know the revenue target for 2025 is around $4.4 to $4.5 billion. What about other valuation metrics? PE ratio, debt.
Interestingly, those specifics weren't actually detailed in the materials we reviewed for this.
Oh, so PE, debt to equity, price to book, not readily available.
Not in these particular sources, no. Which really highlights for you, the listener, the need to maybe check financial platforms or their official filings for that deeper dive into valuation and leverage.
Good point. And dividends, are they a dividend payer?
Doesn't look like it, or at least not significantly, based on this information.
Okay. And management, who's leading the charge?
Jeff Simmons is the CEO, and Todd Young is the CFO.
And I mentioned Young is particularly focused on earnings potential.
Yes, the sources noted his focus on improving earnings, which, again, ties back to watching those upcoming financial results closely.
Any word on insider trading activity? Management buying or selling?
That wasn't covered either, unfortunately. Another area where you'd need to check SEC filings for the latest info, if that's part of your research process.
Understood. So looking ahead, what are the absolute key things to watch for Elanco?
Number one, without a doubt, is that Q1 earnings announcement on May 7th. That's the immediate catalyst.
And beyond that?
Seeing how well they launch and commercialize these new products they've been talking about throughout the year.
The innovation pipeline delivering.
Exactly. And also just observing how management steers the ship, navigates the competition, and handles things following those board changes. Execution is key.
One source did give a kind of overall recommendation, didn't it? Hold moderate buy.
Yes, which seems to capture that balance we've discussed. Optimism about the strategy and potential.
Tempered by wanting to see the proof in the upcoming numbers?
Precisely. It acknowledges the strengths, but recognizes the need for confirmation from the financials.
Okay, so let's try to pull this together for you, the learner. What's the main takeaway here?
Well, Elanco clearly looks like a company pushing hard on innovation within what's generally seen as a resilient sector, animal health.
Right, pets and farm animals. That demand tends to hold up. The upcoming earnings are obviously critical for checking their financial path.
And their big initiatives, like tackling parvovirus, exploring things like gene therapy, it paints a picture of a company aiming high.
So this overview gives you a really solid foundation. But as we noted, digging deeper into specific financials, competitor moves, industry trends, that's where you'll get the full picture.
Absolutely. What strikes me is their proactive approach. They seem to be tackling current issues like parvo while also investing heavily in future tech like AI and gene therapy. The board changes add another layer to watch.
Suggests they're not standing still.
Definitely not. But continuous monitoring of their performance against their goals and the competition is essential, as always.
We hope this exploration has provided some valuable insights today. Please do subscribe, like, and comment. Let us know what other companies or topics you'd like us to unpack.
Your feedback helps shape the show.
And as you continue your own research on Elanco, here's something to think about. In an industry driven by both cutting-edge science and the deep emotional connection people have with animals, how might Elanco's strategy of balancing both pet and farm animal health ultimately influence their long-term success and maybe even their broader impact?